by discussing the first transaction cycle, and that is your revenue receipt cycle. So revenue receipt cycle is also known as your sale collection cycle, or also known as your order to cash. Order to cash. Okay. So first, let's discuss the objective of the cycle and what are the functions inside it. So first objective. First objective of the cycle is to provide proper valuation of accounts affected. So since we're talking about revenue and receipt, we need to determine the different accounts affected. And what are the accounts affected? First, for your sales. So for your sales, we have your sales returns, allowances, and sales discount. And take note, sales can be either credit sales or cash sales. If that is cash sales, ultimately, we finish already the revenue and receipt cycle. But if that is credit sale, we still need to convert that credit into cash so that we have revenue and receipt cycle. So ultimately, the items affected here are your sales, your receivables, and ultimately your cash. So under sales, we have your sales, and then we have your contra sales account. Those are your returns, allowances, and discount. So for receipts, we have receivables. We have your accounts receivable or any receivable. It could be a trade receivable. It could be a trade note receivable, as long as that is a receivable. And we look into our contra account. That is your allowance for bad debts. And since you're recognizing bad debts, then you should have a bad debt expense. And then lastly, we have your cash. So dito lang umiikot yung buong cycle sa sales, sa receivables, and sa cash. So sales, we have the account itself and the contra account. For receivables, we have the receivable itself and the contra account, including its expense account. For cash, you only have your cash. Now, since we know the accounts affected, what are the records affected by this particular cycle? First, we have your sales journal. That is for your sales. We also have your sales returns and allowances journal. Also, we have your cash receipts journal for our receipts. General journal, if ever it is not recorded to your sales or cash, it could be recorded in your general journal. And then we have also your AR ledgers and your trial balance. So those are the normal records that are affected. Now, what is the function of your revenue receipt cycle? So the functions again is first on the sale and then ultimately on your collection. So for the sale, the resources are distributed to customers in exchange for promises of future payment. That is the sale. And for collection, that is the customers pay cash for the resources distributed to them. So we have a sale, we provide resources to the customers. In return, customers will pay us cash. So again, those are the two main functions within the revenue receipt cycle, also known as sale collection cycle, also known as order to cash. Now, since we have already discussed the revenue and receipt cycle, the objective and its function, let's now talk about the different activities within it, the different departments, and the different records that flow out of that particular department, and the possible controls. So, understanding the departments involved and the possible control. If you still remember earlier, the first responsibility of the auditor is to understand the cycle itself and the different controls. So let's look now on your revenue and receipt. So the first department is your sales department. The sales department is there to manage and improve the sales of the entity. So what are the normal activities within the sales department? First, locate and encourage us buyers. Why? Because we want to improve the sale or to manage the sale. At the same time, the sales department negotiates and deals with the customers. It also accepts customer orders, and from the customer order, it now prepares sales order. So we have here a customer. The customer will provide a customer order. Now, the sales department, upon receipt of the customer order, it will now prepare a sales order. and this sales order will now be distributed. Aside from that, the sales department will also retain a copy of the sales order and monitor the status of that order. And if in case there will be returns, if in case there will be return, the sales department is responsible for the review and granting of that return. And once it is granted, the sales department will also provide for the credit memo. So therefore, the sales department is actually responsible on two items. First, on initiating the sale. Second, that is as to the request for the returns. Okay, initiating the sale and the returns. Now, since we know the different activities within the sales department, what are the possible controls that should be in place for that particular department? First, since they are to manage and improve the sales, they are the ones who talk with the customer. The first control is to have the exclusive function to communicate with the customer. So the other departments could not communicate to them. It is only the sales department. That's why whenever the customer will now return, to return it, you return it to the sales department. To order it, you order it towards the sales department. So all communication with the customer is with the sales department. Second, they maintain master list of the customers and the prices for the products and services. Why? Because they are the person in charge in communication with the customer. Therefore, they must know the different products within the entity and they must know the different prices of those products and services. And then lastly, since they should locate and maintain their customers, then they must also complete documentation for new customers. So all customer data will be within the sales department. Now, after your sales department, we go to the next department, and that is your credit department. So what is the use of the credit department? The use of the credit department is to minimize exposure to high-risk customers. So who are these high-risk customers? These are the customers who will or has the possibility on defaulting on the particular purchase or sale. So once the sales department accepts the order, it will send out now sales order. So the sales order will go to the credit department. And the credit department will now check whether we could approve this particular sales order or not. So let's look into the activity then of the credit department. So first, it receives the sales order from the sales department. And then the credit department will now conduct credit investigation. Why? Because, again, the main objective of the credit department is to minimize exposure to high-risk customers. When we say minimize exposure, that is to at least minimize defaults from credit customers. Now, if the credit department, based on its credit investigation, will now determine that the customer could pay the order, then it could now approve. So, if the credit department will approve the credit, it will now notify the sales order regarding the approval or denial. Okay, so approve credit request. So you can now inform the sales whether you approve it or you deny it. And then after that, you now forward it to the warehouse. So why do we need to forward the sales order to the warehouse? Because now the warehouse will be the one to release. Okay, the warehouse will be the one to release the particular order. So the process again, it starts with a sales order coming from sales, and the sales order will flow to the credit department. And the sales order will also be forwarded to the warehouse. Now, that will only be forwarded once the credit department approves the sales order. If not, then it will not continue. Okay, so since we know already the process of the credit department, and then we look into the possible controls within the department. So the first control in place is it must be independent from sales. Why? Because it is the credit department who now approves the sale. So again, we need to separate custody, authorization, and recording. So the authorization of sale comes from the credit department. Therefore, the authorization must be separate from the initiating department. Next, maintain and update list of approved customers so that they will not continue to keep on checking the different customers, whether the customer can pay or not. So they now maintain a list of approved customers. So that in case, again, it is not repetitive in nature. Now we're done with sales and credit. We go now to the next department. Our next department is your warehouse or inventory control. So your warehouse or inventory control controls the movement and monitor the level and condition of your inventories. Why? Because they are the ones who fill in now the different orders. So they fill the order. If you still remember, um, we have here your sales, we have here your credit department. So the sales order will flow to your credit department. And your credit department will now notify whether they will approve the sale order or not. If they will approve it, it will flow to the warehouse. Okay? So the warehouse will now fill the order, So let's look into the process of the warehouse or inventory control. So the first activity, they will now review the approved sales order. So once the credit department will forward the SO, we call it as approved sales order. And now, the warehouse will monitor the availability of inventories and update the sales department, whether they can fill that sales order or not. Next, it now notifies the sales department of the shipment, and then they will now release the goods to the courier. So once it is released, they will have now the different documents, and these documents will be forwarded now to the billing department. Next, the receiving department receives returned goods and prepares receiving report, and also compares received goods versus the credit memo. So ultimately, if you still remember, sales is looking into the different items for our sale. So they accept the sales order, at the same time, they grant the return. So upon granting of return, the warehouse will receive it. So they will now look into the returned goods depending on the uh, granted goods for return or the credit memo. And then we now compare the received goods versus the credit memo. By the way, why do we call it as a credit memo? We call it as a credit memo because generally AR, the normal balance is debit. And if you will return the goods, it means you will decrease AR. So if you decrease the AR, it means you need to credit it. That's why it's known as credit memo. So once you debit AR, it means if you receive a debit memo on your AR, meaning you increase. But if that is credit memo, meaning you decrease, such as your goods. That's why we call it as your credit memo. It is different from your liability. Because when we say liability, you have a debit memo, it means that the liability will decrease. Why? Because liability as a rule is credit, the normal balance. So if you decrease it, meaning you need to debit it. That's why for liability to decrease it, it is debit memo. While for AR, to decrease it, it's known as credit memo. Okay, so for asset, to decrease it, we call it as credit memo. For liability, to decrease it, we call it debit memo. Now, if you want to increase your asset, we call it debit memo. If you want to increase your liability, we call it credit memo. So the credit memo or debit memo depends, the effect of it depends on the type of account that is affected. If it's asset, the credit or debit has a different effect. And the liability, the debit or credit has a different effect. If ever you will be confused soon, just remember the normal balances of your accounts. And once you remember it, it would be easier for you to answer or know the effect of that particular memo. Okay? So now, having known the different activities within the warehouse or inventory control, let's look into the different controls in place. So the first control in place is to monitor inventory levels to provide assurance if it's available or not. So again, we said we need to determine or we look into or monitor the inventories so that we can update our sales department whether that inventory is in our possession or within the warehouse so that we can fill out the particular sale. Next, we report the sales department regarding possible inventory count. Why? Because the sales could not possibly keep on selling if ever the inventory is low. Therefore, to keep on selling, you must inform the sales department that there are available inventory regarding a particular item. Next department, we go now to your shipping. So the main activity or the main purpose or objective of shipping is to provide reasonable assurance that all shipments are authorized. So as to the authorization, we compare the sales order with the approved inventories from the warehouse. Why do we need to look into approved inventories from the warehouse? Remember, we will notify the sales department regarding the items that we filled. So, if ever not all items are filled, then you just compare the items that are really shipped so that we can check if ever the SO are already filled or not. Next, we complete the shipping documents, that is your delivery receipt, and prepares for shipment. After that, we also notify the sales department that goods have been shipped, and we forward the sales order and delivery receipt to the billing department. Okay, so we complete now the whole process. We start first with sales. So the sales order will be given to the credit department. And the credit department will notify the sales department whether it is approved or not. Once it is approved, then it will flow to your warehouse. And then this warehouse will now approve also the items that we will ship. Therefore, the shipping department, the SO will now be forwarded to the shipping department, and together with the delivery receipt, this item will go to the billing department. And you will notify again sales about the goods that have been shipped. So what are the possible controls then on your shipping department? First, we have your pre-numbered sales invoice, and then the delivery receipt must be present that the billed sales order has been shipped, because we need to compare the sales order together with the delivery receipt. And once this sales order delivery receipt is now provided to your billing, the billing will now provide for the sales invoice. Last, we have your accounting department. For accounting department, we have inventory accounting, that is to provide costing regarding the goods sold and to update possible inventory records. For general accounting, we record the sale and forward the sales invoice to your AR department. Sales invoice to AR department. And then lastly, the AR department will update the subsidiary ledger to customer accounts. Now, let's look into the receipt cycle. So we're done with revenue cycle. Let's look into your receipt cycle. So the first department is your mailroom. So for mailroom, it receives now the remittance advice and customer checks from the customer. Again, for the receipt cycle, this talks now about the payment of the customer. So we are receiving the payment of the customer. So how does your customer pay? It is together with a remittance advice plus your check or your payment. And then the mailroom, based on what has been received, will prepare a summary of the receipts. And it will also endorse the checks and remittance to the Treasury Department. And it will now provide the report to AR Department. So this one, you will create a report. This report is known as your summary of receipts. And the summary of receipts is provided to your AR department. But take note, the check and remittance advice will be given to your treasury. Okay? The report to your AR department, but the check and remittance advice to the treasury. Why? Because we only wanted that the AR department will update it based on our report. But as to the cash handling, we give it to your treasury. This is to remove or to properly segregate the duties. Because if ever the report is updated by the AR department, including the handling of check and remittance advice, there could already be a problem with your control. So the main activity therefore is a uh, separate department handling the summary and handling the checks and remittance advice. Now for the Treasury Department will now update the cash records. And once it is now updated, then we prepare the deposit slips for the check received because we will now uh, deposit it or encash it to the bank. At the same time, it will prepare a collection summary to send it to your AR and general accounting. So why do we call it your collection summary? If in the main room we have your receipt summary, in your treasury we have your collection summary. So the AR department will now reconcile the receipt and your collection. That whatever is received was properly collected by the treasury department, or whatever is received was properly deposited by the treasury department. So deposit now the collection to the bank, and if ever they could authorize write-off of AR. So who authorized? It is now the treasurer. Now let's go to your accounting department. For accounting department, we have your AR and general accounting. So for AR, we have the 4 items, while for general accounting, we have the 1 item. So first, AR, it compares the remittance advice and the cash summary from the treasury. As I told you earlier, you compare the summary of receipt and the summary of your collections. And based on that, we look whether the amounts tally. If not, it means that possibly the mailroom did not report all the amount collected, or the treasury did not deposit all the amount collected. And once you reconcile those items, you now update the subsidiary ledger and forward the summary to general accounting. Since you are updating the subsidiary ledger, then you review now the customer accounts. And in reviewing the customer accounts, you age those receivables. And once you age those receivables, you can now write off the delinquent accounts depending on the policy of the items or the entity. Always remember this. The one who write off is the treasurer. The recommendation to write off is the AR department. Okay? The one who writes off is the treasurer. The one who recommends is the AR department. Next, in general accounting, they validate the report from the treasury and AR and now update the general ledger. So SL, AR department. GL, general accounting department. Okay? So do not forget the whole processes as to revenue and as to your receipt. So we will end first our discussion with the different departments and processes. Later, we will discuss the different forms and documents, including tests of controls and substantive tests.